Good morning, folks, and good morning from London. It is a fabulous morning in London. As you can see behind me, sun is absolutely shining. The last few days has been absolutely cold, and of course, everyone was enjoying the long weekend. Now, speaking of the long weekend, today we have a lot to cover because of this massive long holiday period that we had for the last few days. But before we do anything else, as always, it is important for us to go through a bit of a disclaimer. Anything which will be discussed in this video cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Briefly, something about myself. I have been trading for over 15 years. My wealth of trading spans by working with Bank of New York Mellon as an equity trader, as a hedge fund trader, and with Bank of America as an equity trader, and currently providing services as a chief market analyst to EverTrade. Now, folks, remember, if you haven't subscribed to our channel, please do so, because what we do is really give you all the sort of a flavor in this market, clear out the noise, and present you the opportunities where you can possibly you can go and invest in those particular companies or markets, because we do have a lot to cover in the stock market. So why don't we begin by looking at the market's biggest event, which happened last Friday when everyone was enjoying their Good Friday. So basically on Friday, we had this big US non-farm payroll number came. It came, and then the number was a lot more stronger than the market's expectation. We saw the US economy really producing big jobs number, and that pushed the US futures to the upside. Of course, there wasn't much of a reaction, so the US stock market really had the chance to react to those strong numbers yesterday. We saw the S&P 500 index moving to the upside. We saw the Dow Jones index moving to the upside, and of course the Nasdaq. Now remember, folks, we have talked about the Nasdaq index and the weakness in previous sessions several times, and now it is really that the Nasdaq index is moving to the upside because the index has crossed above the 50-day simple moving average. Now here is something which is very important for you guys to pay attention to. Number one, we know that the tech stocks have been under immense pressure. Why? Because investors have been selling tech stocks. They've been taking their initial capital off, and of course they've been shaving their profit of their trades as well. Now we have these investors and traders really ready to pump the Nasdaq to the upside, and hence it is my belief that the Nasdaq index is really going to see a massive momentum to the upside. Now, of course, I'm not saying that we will not see momentum for the S&P 500 index or the Dow Jones, because remember, Joe Biden is talking about another stimulus package, which is very much geared for infrastructure. So that means industrial stocks, industrial materials, steel, aluminium, copper, all of them are very much going to move to the upside. And something else that we have also seen is a new air travel bubble, where New Zealand and Australians, they can travel among each other between the two countries without having any concerns in relation to COVID. Now, this is fantastic. Why? Because both countries have been able to control their COVID cases. Now they can present an example to other countries how everyone can travel without quarantine, being worried about quarantine. And of course, that really pumped their airlines to the upside, and we are likely to see similar sort of trends emerging between the UK and the United States and the UAE, where coronavirus vaccine situation has produced positive results, and we have seen many people really getting their vaccine. So really, airline stocks, companies like American Airlines, Delta, United, Ryanair, Wizz Air, and Air France especially today has been able to get another lifeline from the government. Now the government has literally 90% stake, so we can really see these stocks popping to the upside. But more importantly, where we can see more of a risk to reward ratio is really in the cruise line industry, because if you look at companies like Norwegian Cruise, Royal Caribbean Cruise, you can see that their stock prices haven't recovered at all in comparison to what we have seen in the hotel industry or in the airline industry, because we have seen a massive momentum, but in Norwegian cruise, but in Royal Caribbean, we have not seen that. And that is where the big momentum and the shift is. And of course, if you wanted to have a bit more explanation, bit more knowledge on this one, feel free to comment them over here, because I'd be more than happy to provide you more up-to-date training on in relation to that, which stocks to look for, what to look for, what sectors to look for, and then how to really segregate them, and the timings of them when to really enter. And of course, guys, if you like the content, please feel free to smash that like button, because it helps us to get into the Google's algorithm. Now, let's shift our focus into commodities and see what exactly is going on there. What I am seeing is the Brent and crude prices. First of all, the spread between the two are narrowing, which is positive. And more importantly, we are seeing both of them trading to the upside. Now, this is very positive, because remember last week we saw OPEC ramping up its production, and we are going to see more of that as well. So the question is coming, which is like, what do you think about the price in the coming month? Now, if you are thinking about oil prices, I would say that the prices are likely to move to the upside, because we are seeing more people getting the vaccine. And of course, there are concerns with respect to lockdown as well. So we are not going to see any explosion in terms of our prices to the upside. So if that is your question, is in relation to oil, and it's a very, very fabulous question. And this is why you guys should be really asking all the questions. Now, in terms of gold price, I'm very happy, because price have been able to, once again, this is the third time, in fact, the price have been able to move above its from its support zone, which we've mentioned in our previous analysis. And that is why it is very important for you guys to subscribe and like the comments, because like the content, because it really helps you guys to get the notification. So gold price came into the support zone, which we mentioned in our previous video, and now it is back above the 1700. So overall, we can say that the prices are very much consolidating. We are not seeing any disruption in terms of the the bearish move when it comes to really gold prices. Now, further shifting the gear into the crypto market, of course, you can see the big smile on my face, and that is because XRP is really exploding today. Right now, it is at 0.98. Of course, the spread is humongous, between 0.96 to 0.98 on the platform. But the positive thing is that we have broken out of that ugly consolidation range with respect to XRP. So really, now I'm expecting this price to continue to move to the upside, go all the way to 1.20, then 1.50, 1.8 or 70, and then $2, because we have not seen momentum with respect to XRP. Bitcoin has tripled in its price. Ethereum is pretty much doubled its price, but XRP is the only one where we have not seen massive momentum, and now we are seeing that momentum, which is very, very positive, and it is likely to continue from here onwards. So we will continue to monitor everything else. And once again, if you like the content, smash that like button. Otherwise, I'll see you guys same time, same place tomorrow. Thank you for taking that time out to come and contribute over here. Thank you.